Let's get to Bob Pisani this morning. Hey, Bob.
Morning, guys. We're up, but just barely, rather remarkably. We were up a lot more than that. Let me just show you the S&P futures. Retail sales came out, not normally a market mover, but look at that. We moved down about 6 or 7 points. Core retail sales, which gets to the consumer, a little weaker than expected, and that goes to the idea U.S. consumer, that's all important, so keep an eye on that. In terms of sectors, they still believe it's going to be short-term on coronavirus. Look, semiconductors holding up, China ETF holding up, consumer discretionary staples. Banks weak, of course, on yields here, 1.58 on the 10-year yield. Hey, speaking of bonds, big inflows into bond funds still. In fact, Bank of America thought it was a record for bond inflows here. Here's the biggest bond ETF of all, AGG. That's the big aggregate one. As you can see, that's held up very well. But again, it's the inflows that matter. Take a look at what's going on in terms of the strategist commentaries. Jeffrey says the risk, I think they're right, potential for outbreaks somewhere else. We haven't seen that yet, but everybody's looking for that. Bank of America said the U-shaped recovery everybody's expecting is more likely to be an L now, largely due to coronavirus and potentially the U.S. elections. Bank of America also said we're holding up so well because of that Powell put and other central bank help that's around the world. Take a look at some of the coronavirus stories here. Royal Caribbean, you heard about that, canceling some cruises, impacting their full-year results. NVIDIA had very good numbers overall, upbeat forecast. Look at that number, up 6%, despite being potentially impacted. And Expedia, of course, Barry Diller, they got a beat here. The analyst over at Benchmark upgraded them and say they're giving them a pass on coronavirus. I think an interesting comment there, but you see big move up there on the positive side for Expedia. Meantime, Europe, remember this idea of the global bottoming in the economy. These numbers were not good on GDP. Now, over there, they tend to compare quarter over quarter rather than year over year. So I'm showing you that. Eurozone up 0.1%. Germany virtually flat. That's not much of a global recovery over in Europe at all. So that's a little bit of a concern. Despite that, even Europe is holding up very well. I keep pointing out the stock 600, which is the S&P 500 for Europe, sitting at an historic high. We are a little weaker. We're still open over in Europe, so we're a little weaker, but we were positive earlier in the day, but an historic high. So even Carl, over in Europe, they still believe that the impact of the coronavirus is going to be fairly limited. But those economic numbers, they need to get a little bit better. We're going to have problems in the next couple months.